Good morning. It's Tuesday, December 1st. I'm Katherine Ross, and I'm joined live by Jim Cramer. Jim, the markets are higher. I mean, we've got the Dow up about 1.3%. We've got the S&P up 1.3%, and the NASDAQ up as well. So how are you going to be approaching markets during Tuesday's trading?
Well, I think what we're looking at is trying to figure out what we're still below our basis, but recognizing that we have a lot of the stocks that are flying and are kind of unwilling to let them go. I'm looking at, for instance, let me give you an example. I'm looking at something like a Disney. It's up 3 to 151. I'm totally unwilling to let that go. I just can't think of a reason to do it. Honeywell up 5, was down 5 yesterday. The ones that I think you can buy, just so you know, I mean, right now, I think you can go in. I can't buy Salesforce because of the deal. It's really getting killed. I think Nvidia still works. I think you can buy AMD at 92. Well, I'm not even worried about that. But the most important one is you can buy UPS. FedEx is as disentangled. FedEx is up 6. UPS is barely up. I think UPS works very, very well here. Now, how about the take twos? How about the companies that are viewed as being that the pandemic's over? Will you give me a break? Yesterday, Lisa Su on her AMD call said the hottest area for gifts are games. And that's why I think take two down 4 is a buy.
Jim, one stock that I'm curious if you will think that it's a buy when it goes public is Airbnb. Now, Airbnb is seeking a valuation of up to $35
Home
billion
run,
in its IPO.
home run. Chesky, I'm pretty close there. It started out, it's a very interesting arc because Brian is a fantastic guy. And I met him many, many years ago. When he started really kind of just going out, what's our Airbnb? There are people who didn't realize the possibility of getting COVID in an elevator. They didn't realize the possibility of getting COVID from someone cleaning who may have COVID. They didn't understand lobbies as places to have COVID. They didn't understand the aerosol concept of you might be breathing COVID, which is something that's been a novel illness that people don't understand. So where can you avoid all of those hotspots? Very easy. In a house. And you just come, you bring your Clorox wipes, you make it clean, and no one comes into your house, and it's fantastic. My wife is doing it. She is very excited about it. She's going to be going for a long time because she believes that it's really important. I mean, very important that there be a chance to get out before you get this. Because remember, Dr. Gottlieb is talking about 30 to 40% people going to get this before you get the vaccine. So I just think that what's going on here, Airbnb is the way to avoid COVID if you're going to travel.
So, Jim, let's put out a hypothetical scenario here. Let's say that Airbnb prices at the higher end, which is about $50 a share. Would you pull the trigger and buy when it debuts?
Yes. Yes. Now, I don't think it'll come there. And I've just been, candidly, I'm usually pretty lowballing. There was a mistake I made with Lyft. Lyft was about to open at 100. I wanted it to come down to 80. And it did that. And people said, oh, Cramer loved it. I mean, I'm just trying. I don't want things to be up really a lot. And I've been lowballing the rest of them because I don't like the criticism. But the fact is that deal won't come there because it's very, very exciting.
For investors watching this, Airbnb is eyeing about a $45 to $50 debut. Jim, now I want to ask you about Mad Money last night because you interviewed
Yes,
Michael
sure. I was all
Dell.
over. I'm
Yes,
sorry.
you were. And specifically, I want to talk to you about your interview with Michael Dell because yesterday you told me that Dell and HP have really benefited from these stay-at-home plays. But do you feel good
Oh,
about Dell
God.
once
They're
we
just
seriously start discussing going back to the office?
right. Dell's at 9 times earnings. Listen to me. $69. It's delevering. One of the reasons why it's got such a low price earnings multiple is people feel that it's too much debt. That's nonsense. Michael Dell is having a fantastic fourth quarter. I'm talking about buying that stock hand over fist right here, right now. DELL.
All right, another stock that you didn't always like, which was Kohl's, but you used to own it. And this deal, which would put mini Sephora's inside of 850 Kohl's by 2023, is very positive in your words. So what would it take for you to bullpen this stock?
Oh, geez. Lost so much money on it. I think it's not in the cards. I do like the fact that they're alive and they have a pulse and they're doing some things. But to go back to that one, I think is asking a little too much.
One group of stocks which has really benefited from the stay-at-home play is definitely the delivery app group, and this includes companies like Uber and soon-to-be public DoorDash. Jim, should investors buy Uber or DoorDash when it IPOs?
Oh my God. Okay, so listen, Uber's making a series of meetings to try to figure out what owners want. Our restaurants are shut. They're mothballed because there's really no way you can make any money in New York, except for if you deliver. And DoorDash and Uber are both anxious to try to keep, I know people aren't going to believe me, anxious to keep businesses alive. So, I mean, I'm looking to them. I need Facebook to get on board too. Obviously, pressuring the Treasury Secretary that he should do it. These restaurants are, in many ways, the lifeblood of cities. And I think that people have to recognize that without help, business interruption insurance, they're finished, because you simply can't have the overhead. I mean, for instance, we have two pizza ovens at Longshoreman, and you think that we could just make money and deliver, right? But you can't. The margins are too low. So and so we need help. I can't do taco delivery, whatever, but we're going to get help. And when it happens, we're going to be open for business. And I'm excited about that, but we're not there yet. And remember, there's going to be a lot more people that get COVID before we're done. A lot.
Speaking of a stock that's kind of been the lifeblood of the average American for a while is Zoom. And Zoom's incredible growth may honestly be starting to decline. And Jim, I'll be honest, I canceled my Zoom account 2 weeks ago. So what does this mean for Zoom when we return to normal?
Well, I mean, I think that the problem with Zoom, when I go over the conference call, and my stepson works for Zoom, if I go over the conference call, they mentioned a couple of accounts, and they weren't big enough. And this reminds me when Facebook first started. They didn't get what I thought were the kind of marquee clients that you need to have. Zoom needs to start winning over. I mean, Zoom's in a lot of businesses. A lot of companies use it. But they have to make a compelling case. They did education, and then you start thinking, well, geez, after the vaccine, people won't use it for education. They didn't talk about how it's easier and it's going to work the way out. It felt like Dropbox. It felt like Dropbox. When you just said, all right, Dropbox was on fire. Now there's too much competition. I don't think that's true. I think that Eric Yuan is doing a fantastic job. But the marketplace is saying, no, the marketplace is saying, look, here's how we look at it. Post the pandemic, these guys won't have this valuation. I don't know.
Jim, it's December, and I know that you don't want to buy Zoom here.
No, I think Zoom could go lower. It was selling at 50 times times sales. And I just feel like that what's happened is people are just saying, this is not a stock for when America opens again. I can't fight the tape here, and I like the company very much.
While we're talking about America opening again, there's quite a few hurdles for us to get through, and it's not just the vaccine, it's also stimulus. And I know that you and I have talked about this before, but yesterday the Government Accountability Office found that the weekly jobless claims were inaccurate and said that the unemployed are being underpaid. Now, we did just get news right before you and I went live that there is a proposal for about a $908 billion package from both Democrats and Republicans, and this would include about $288 billion in Paycheck Protection Program and about $160 billion in state and local government aid.
Has to happen.
Is this too small though, or is this just the right step?
No, it's not. It's not. It's not. Secretary Mnuchin very much wants to do something. The CARES Act was his. Anybody who was close to him knows that this is a man who is trying so hard to make it so that small business does well. Small, medium-sized business. I just don't think that people realize that's where his heart is. He's done a great job. I know there's a lot of people hate all Republicans. I don't care. He's done a great job, and I think he's going to nail this right at the end and cement his legacy as someone who really cared about small, medium-sized businesses.
Now, Jim, I really want to get over to our Action Alerts Plus daily rundown show where we've got some exclusive content. But before we do, you have an exciting show coming up with our friend and co-host, Bill Enright. After this, you're going to be hopping onto Bull Market Fantasy, right? What are you guys going to talk about today?
I mean, there's a lot of things that are in flux, a lot of line changes. a lot of things that I just are material to those who obviously watch this and also bet. And I understand, look, there is an overlap, or else I wouldn't be doing it. So I can't wait. I've got that. Plus, I've got all the stuff we can do for that for action alerts. And I also want, excuse me, when we get back to action alerts, I do want to mention Eric Johnson's incredible piece about Micron because it's impacting a lot of our stocks.
And there you have it. Come join us over on actionalertsplus.com. I'm Catherine Ross, and we'll see you next time.